Okay, so hello and welcome everyone to today's session of AFM Financial Management, Advanced Financial Management. Now, now this particular session, which I am conducting right now, this is going to be extremely helpful for all of you, whoever is attending, and those who are not attending, they can watch the recording later. We will share the recording as well. What is the importance of this particular session? Now, many students have studied from me, okay, but the webinar is open to those students as well who haven't studied, and we also put it in public places so that everyone can gain benefit from that, no matter they have studied from us or not. Now, people who are giving paper in the coming attempt, okay, so they all know that now the examination has 20 professional marks, right? And everybody is just trying to search maximum information from internet so that somewhat they are able to capture maximum marks out of these 20 professional marks, and they can go forward and score good in the exam. So the purpose of this session is very simple. I will be telling you some techniques via some examples so that you are able to earn those marks very nicely. Okay, you are able to earn those marks very nicely, and in fact very easily. And to demonstrate that, I will be using the examination software, the ACCA examination software, which comes up in the real exam. There are slight differences between a normal Excel and that examination spreadsheet which comes up. So I will tell you the minor differences as well, which are there in the spreadsheet and which are there in this. Okay, so let's just start it. Okay. Now, first of all, when you talk about gaining professional marks, in order to gain professional marks, obviously, who will gain professional marks? Professional marks are gained by those who are professional. Professional marks are gained by those who are professional. So you have to work everything as a professional to gain those professional marks. Okay. Now, it's not that difficult. Okay. And I'm sure once you and other guys who take this lecture of mine, maybe now, maybe later, they're going to be absolutely confident before going in the exam on how to gain those professional marks. Okay. Now, I will be doing and demonstrating all the stuff on the examination software rather than in Excel, because I told you that there are slight differences between Excel and the examination software. So it's better to use that examination software. Okay, so I'm just opening the examination software now. It's called ACCA CBE practice platform. When you go on this ACCA CBE practice platform, this is the exact platform which comes in the exam. You can log into the practice platform. The login of the practice platform requires your username, ACCA ID, and password. Sign in. So this is similar to Excel, and the practice platform comes in front of you. What I'm going to do here is I will just be doing everything on this practice platform. This is the real software that comes in your exam, so that you're able to understand what exactly is happening. Okay, now we are talking here about professional marks. As you all know, question number 1, which comes up of 50 marks. Question number 1, which comes up of 50 marks in your exam. Okay. Question number 1, 50 marks. Usually asks for a report. Question number 1 of 50 marks usually asks for a report. Okay. Now, since your paper has 20 professional marks, but the examiner has given a statement that question number 1 of 50 marks, this question will carry 10 professional marks. This question will carry 10 professional marks. There are 20 professional marks in your complete exam, but out of those 20 professional marks, question number 1 of 50 marks will carry 10 professional marks. Okay. And you all know that question number 1 of 50 marks asks for a report. Now, what was the previous pattern? Previously, this question number of 50 marks, question number 1 of 50 marks, which asked for a report, it carried 4 professional marks. Previously, it carried 4 professional marks. Now it's not the case. Now this question number 1, which asks for a report, it always asks for a report. It will have 10 professional marks. Okay. Now, previously, it had 4 professional marks. Previously, it had 4 professional marks. Now, students who have studied from me, you all know that previously this question had 4 professional marks. So to earn those 4 professional marks, what did I guide you? To earn those 4 professional marks, it asked for a report. I guided you that the report should have a pattern to, from, date, subject, right? To board of directors, from anyone, date, XXX, subject, any 2-word statement. And then it had an introduction, and in the introduction, I made you write this report, then requirement 1, it then requirement 2, it then requirement 3. Then I told you every requirement should have headings. Every requirement should have headings. Okay, like requirement 1, you gave heading of requirement 1. Okay, then requirement 2. Heading. Requirement 2. Then requirement 3. Heading. solve all requirements in their heading. And I told you, if a requirement is carrying calculation, no calculation in the report, in the appendix. And if it's a theory discussion requirement, start writing there. Okay, this is the way of earning 4 professional marks. This was previously the way of earning 4 professional marks. I want you all to be very, very attentive in this, because I'm just starting the core thing of this lecture. Now we have 20 professional marks. Okay, question number 150 marks will carry 10 professional marks. Previously, this question used to carry 4 professional marks. It asked for a report. Now also the question number 1 of 50 marks will come. It will ask for a report. Previously, it had 4 professional marks. Now to earn those 4 professional marks, I gave you a format. That first you need to write to, from, date and subject. Okay, first you need to write to, from, date and subject. Okay, then there is an introduction. This report requires NPV, then requires discussion, blah, blah, blah. And then I told you that every requirement must carry headings so that it's separated. However, if a requirement is a discussion requirement, write the answer below that. If the question is a calculation requirement, appendix. Now, these formats will help you to earn for professional marks. Okay. Now, this requirement carries 10 marks. So, you know how to earn 4 marks. 2 from, date, subject, introduction, requirement 1, 2, 3, calculation in appendix, discussion right there. How to get further 6 marks. Because this requirement now carries. This requirement now carries 10 marks. This requirement now carries 10 marks. I know how to earn 4 because that's what my previous methodology is. Write to, from, date, subject, introduction, and then requirement 1, 2, 3. Every requirement should have the solution. If it's a calculation in appendix, if it's a discussion right there. But I need further 6 marks because this requirement of question number 150 marks now carries 10 marks. I know how to earn 4. How to get further 6 marks? Now, there are 2 instructions by the examiner. Instruction number 1, use maximum headings. Use maximum headings and subheadings. Previously, he was not that crystal clear about headings and subheadings. Now he has clearly stated that if you want to gain further 6 marks, because you know how to gain 4 marks, that was in the previous syllabus, previous pattern. For a report to gain 4 professional marks, 2 from, date, subject, introduction, 4 requirements, 4 headings. If it's a calculation requirement, appendix. If it's a discussion requirement right there, you get 4 marks. How to gain further 6 marks? Because now in question number 1, the professional marks will be 10. He has clarified, use maximum headings and subheadings. Now you need to put as many headings and subheadings you can in your report. And second, use shortcut functions for NPV, IRR, and MIRR. If you are using traditional methodologies to get NPV, IRR, MIRR, you will gain the working marks, but you will lose professional marks. To earn professional marks, extra 6, because via the report format, which has already been taught to you, specifically I'm talking about my students who have studied from me. We have already taught you how to gain 4 in the previous syllabus. 2 from, date, subject, introduction, every requirement heading, discussion right there, calculation, okay, appendix. But to gain extra 6 marks, there are 2 pieces of instructions. In report, use maximum headings and subheadings. And number 2, use shortcut functions for NPV, IRR, and MIRR. Okay. Now, I don't think I need to teach you point number 1, use maximum headings and subheadings. Okay, you can use as many headings and subheadings as you want. I will be teaching you here the shortcut functions for NPV, IRR, and MIRR. Okay, so this is my core agenda. That shortcut functions for NPV, IRR, and MIRR. It may be the case that you have to watch this video again. There are still 2 weeks in your exams. Practice further questions using these shortcuts so that you have a sound grip. It's not that difficult. And trust me, this will save a hell lot of time of yours. Okay, so I will just quickly repeat for the new joiners that what have we discussed up till now. The objective of this video is how to gain professional marks, 20 marks. People are really worried, trying to work here and there, capture data from the internet, YouTube videos. Okay, how I will gain that 20 professional marks. Okay, because this will make a huge difference between passing and failing. Now, I am telling you that those 20 marks, question number 150 marks report will carry 10 professional marks, remaining 10 professional marks will be in section B. So now question number 150 marks will carry 10 professional marks. Question number 150 marks will always ask for a report. Now, previously, this report had 4 professional marks. I have already taught my students how to gain those 4 professional marks. You need to make a format of the report, 2 from date subject, 2 board of directors from accountant or manager, whatever, date subject. Introduction, you write all requirements. This report calculates NPV, it then calculates discussion, it then requires assumptions, blah, blah, blah. Every requirement must carry headings. And if a requirement is a calculation requirement, appendix reference, if it's a discussion requirement, right there. Okay. Now this question number 150 marks will again ask for the report, but it will carry 10 professional marks. So you know how to get 4 professional marks via this format. How to get extra 6 marks, examiner has 2 instructions for you. Use maximum headings and subheadings. No need to teach that. Okay, I will put maximum headings and subheadings. Now I have taught you how to get headings. Every requirement must have headings. You can add further subheadings to more unprofessional marks. And use shortcut functions for NPV, IRR, or MIRR. Without using shortcut functions, you will gain marks, but lose professional marks. Okay, so please pay attention to this. Okay, now consider a case of NPV. Consider a case for NPV. Okay. Now, if you talk about considering a case of NPV. If you talk about considering a case of NPV, let's suppose how you used to traditionally calculate NPV. Let's suppose how you used to traditionally calculate NPV. Now, let's suppose a project has a 4-year life. Let's suppose a project has a 4-year life. So 0, 1, 2, 3, 4. A project has a 4-year life. So you make columns 0, 1, 2, 3, 4. Now, how do you find NPV? You first write investment. You know, investment is an outflow. For example, it's minus 1,000. Okay, it's at year 0. Then we write sales revenue, selling price into units. For example, the year 1 sales revenue is 2,000. Year 2 sales revenue is 2,500. It's an inflow, therefore positive. Year 3 sales revenue is 2,200, and year 4 sales revenue is 2,400. Now, from revenue, you deduct variable cost. It's an outflow, right? So let's suppose year 1 variable cost is 1,200. Year 2 variable cost is 800. Year 3 variable cost is 600, and year 4 variable cost is 900. Okay. Then you deduct fixed cost. Let's suppose your fixed cost in year 1 is 300. Year 2 fixed cost is 500. It's a step, let's suppose, then 700. and then 900. Okay. You know, once you take revenues and deduct variable cost, fixed cost, so revenue less variable cost less fixed cost gives us taxable profits, right? So taxable profit in, please pay attention, taxable profit in year one is same B28. Taxable profit would be sum of all, so sum of C29 to C31. Please pay attention. This is taxable profit. Now, what you used to do in Excel is, please pay attention, this is the difference here. What you used to do in Excel is that once you get this, it's 2000 minus 1200 minus 300, sum of C29 to C31 profit. You put it here and you used to drag it for the other cells in Excel. When you do it here on the ACCA official examination platform, okay? When you do it on the examination official platform, okay? This happens, that it continues, okay? You don't need to work this out. That, okay, I've done this, now again I go in cell, so sum of right completely, okay, equals to sum of, now it's sales D29 to D31, okay? No need to do that. Once you have just done the first cell, okay, put it here and drag it. It will create it, okay? And if it's not happening like this, then what you can do is you can put it here, just press right click, copy, and then drag. Okay. So after taxable profit, you know, we have to pay tax. Let's suppose tax rate is 30%. Let's suppose tax rate is 30%. Okay. Now in year 0, there are no profits, so no tax. In year 1, 500 profit, it's 30% tax. So pay tax, it's negative. Tax is an outflow. So C32, taxable profit into tax rate is 30%. Negative 150. Now, rather than doing every time this, I will just drag it because it's the same working. Okay. Now, after taxable profit, everything is over. After taxable profit, everything is over. Maybe there is working capital, scrap, whatever. Okay. Anyways, everything is over. So maybe you want to say, okay, sir, I've seen sometimes that after taxable profit, you pay tax. And after tax, there is scrap inflow. Okay. So if there is scrap inflow, you can put a scrap inflow at the end. If there is no scrap inflow, leave it, whatever. And you get net cash flow. So it's minus 1000. That means B28. Then 500 less 150, or you can do sum of 500 is in C32 to C33. And no need to work again and again, just drag it. Now, net cash flows need to be multiplied by a discount factor. Net cash flows need to be multiplied by a discount factor. Let's suppose discount factor is 10%. Let's suppose discount factor is 10%. Okay. So what you will do is discount factor is 10%. Okay. This is your pattern. You go in this formula sheet that's given in the example. I'm sorry, there is some error here, so I have to write that again. Okay, so it's shortcut functions of NPV, IRR, and MIRR. Okay, so I will quickly redefine my stuff. Now, how you used to calculate a traditional NPV? I told you that, for example, the project has a 4-year life, so 0, 1, 2, 3, 4. Okay. You make columns. Now, firstly, investment comes. Let's suppose investment is minus 1,000, it's an outflow. Okay. Then sales revenue. So sales revenue is selling price into units. So let's suppose the year 1 revenue is 2,000 positive. It's an inflow. Year 2 is 2,500, 2,400, and year 4 is 2,200. Then we deduct variable cost. So variable cost, let's suppose it's an outflow, 500, 600, 900, 1,000. Then let's suppose we deduct fixed cost. We all know how to make an investment appraisal schedule. Okay, let's suppose fixed costs are 1,000, it's an outflow. It's a step fixed cost, so 1,000, 100, 1,200, 1,300. Okay. So when we have a revenue, variable cost, fixed cost, we all know that we deduct them to get taxable profits. So taxable profit here, it's same as B6. And here it's the sum of C7 revenue till C9. No need to calculate it again and again. You just need to drag it. Okay. Okay. So revenue less variable cost less fixed cost, you get taxable profit. Now on that taxable profit, we pay tax at the rate of 30%. Okay. So year 0 has no profits, no tax. Year 1 has 500. It's C10, 30% tax, 0.3. It should have been an outflow minus. Okay. And no need to work on it again and again. Just drag it. Okay. After tax, if there is any scrap and etc., you add it. Nothing. Okay, fine. You net them all to get net cash flow. So it's B6 and it's the sum of 500 C10 to C11. After net cash flow, what is your historical practice? After net cash flow, what is your historical practice? You multiply this net cash flow by discount factor. Now let's suppose discount factor is 10%. Now for the year 0, the factor is 1. And what is your traditional practice? You go in the help and formula sheet. On the formula sheet, there is a discount table. So you can say 10% is 0.909 and then 0.826, 0.751, 0.683. So your traditional pattern was taking the discount factor 10% these. Okay. So the 10% factors are 0.909. Then 0.826, then 0.751, then 0.683. Okay. Net cash flows into discount factor gives you present value. So it's B12 into discount factor, B13 present value, and no need to work on again and again, just drag it. And once you get the present values, you net them all to get NPV. Okay. So for NPV, we will net them all, sum of all present values. So it's B14 till F14. You get NPV 81.85 positive. You get NPV 81.85 positive. Okay. Now, if you want to find IRR, what will we do? You have got the positive NPV. That's just your traditional pattern. Okay. Once you have got the NPV, you need to find IRR. You have positive NPV. Now for negative NPV, you need to increase the discount factor. Okay. Because if positive NPV is there, you need negative, you need to increase the discount factor. So let's suppose you make discount factor 15%. Now factor it, year 0 is 1. For 15%, again, go in formula sheet, and at 15%, I am seeing them as year 1, 0.870. $0.756, 0.658, and 0.572. Okay. Now again, net cash flows into discount factor gave you present values. So now net cash flow is B12, steric, B18, and then drag it. Okay, you get present values, and now to get NPV, you will sum all present values. Now it's B19 till F19, 13.84 negative. You have the positive NPV, you have the negative NPV, right? Now, once you have the positive NPV and you have the negative NPV, okay, you can go and find IRR. Traditional pattern, the formula of IRR. Small a is the rate of positive NPV. Small a is the rate of positive NPV. So what is the rate of positive NPV? It's 10%. Positive NPV rate is 10%. Plus capital A. What is capital A? Capital A is positive NPV, 81.85, D16. Upon capital A, D16 minus capital B, D21 into small b, rate of negative NPV. What is the rate of negative NPV? 15% minus positive 10%. You get IRR. And if you want to make it to 2 decimal places, click this percentage tab and 2 decimal places. Click this percentage tab where my hand is, and 2%, 14.28% is the IRR. Okay, this is your traditional practice. Now, see how much time it has taken. See how much time it has taken. Okay. The NPV answer you got, it's 81.85. Okay. And the IRR answer you got, it's 14.28%. And again, I'm saying this is your traditional practice, that you got an NPV and you got an IRR. Okay. If you do like this in the exam now, if you do like this in the exam, you will gain the NPV and IRR marks, but you will lose the 6 professional marks because you are not acting professionally. So what should you do now? What should you do now? Now, if in today's exam, you're asked to find NPV and IRR, you need to use the functions. You don't need to do such a long detail. Okay, how? You will write investment 1,000. Okay, you will write the revenue 2,000, 2,500, 2,400, 2,600. You will deduct the variable cost. You will deduct all fixed costs. You will get taxable profit, then tax, then any scrap value and everything, and you get net cash flow. And you need to stop at net cash flow. You need to stop at net cash flow. Okay, no need to write, okay, discount factor is this 10%. Okay, I write the factor from the table. Then no need to write present values and showing the multiplication of net cash flow and discount factor to get present values, and then netting them all to get NPV. No need to do that. And then positive NPV increase to get negative for the IRR, negative increase, decrease that to get positive. No need to do that. Stop at net cash flow. Write the investment, revenue, variable cost, fixed cost, taxable profits, tax, capital allowances, every cash inflow and flow. And once you're done with them all, net cash flow, no need to write discount factor. Now find NPV directly via function. Find NPV directly via function. How do you get NPV directly via function? Okay, please pay attention. How do you get NPV directly via function? You press equals to, please pay attention. You press equals to and write NPV. You press equals to, write NPV, because you're finding NPV. You write NPV via function, equals to NPV, bracket open. In equals to NPV, bracket open, first write cost of capital. So what was the cost of capital of discount rate that was given in the question? Your WACC, 10%, whatever your WACC is, cost of capital, comma. All net cash flows from year 1 till the end. So what is the net cash flow in year 1? 350. That's C12 till the last year. Don't write the net cash flow of 0. Equals to NPV, bracket open. Write the cost of capital, WACC, discount rate, 10%, comma. Net cash flow of year 1, that's C12 till the last year, F12. Okay, bracket closed. Plus the net cash flow of year 0. Net cash flow of year 0. So what is the net cash flow of year 0? B12. That's it. Okay, what I'm doing, equals to NPV, bracket open, cost of capital percentage, the discount rate 10%, comma, net cash flow cell of year 1 till year 4, so C12 till F12, bracket close, plus net cash flow of year 0, B12, enter. See, what is the NPV? 82.26. So again, don't be unprofessional. Such a long answer in decimals is not liked by the examiner. So to stop percentage to 2 decimal places, I press the percentage tab here. But to stop numbers to 2 decimal places, press the numbers tab. Okay, 82.2. To stop percentage to 2 decimal places, I press the percentage tab above. To stop numbers at 2 decimal places, numbers tab. Okay, 2 decimal places, 82.2. See, 81.85 was here, 82.20. It's almost the same. So just try to understand how much time you got saved. Just writing equals to NPV. Okay, opening the bracket. Okay, writing cost of capital, comma, NCF, year 1 till year 4 cell, bracket closed, plus NCF, year 0 cell. And you got the NPV. Okay, this is what I did. To find NPV via function, I open the cell equals to NPV, comma, bracket open, cost of capital percentage. So cost of capital percentage is 10%, comma, NCF till year 1. So C12 till is 2. NCF till last year, F12, bracket close, plus NCF year 0 cell, P12, NPV. Okay. How much time IRR takes? How much time IRR takes? You get positive NPV. To get negative NPV, increase the discount factor, get a negative NPV, put in IRR formula. If you have the NPV negative, decrease the discount rate, second NPV IRR. You will lose professional marks. IRR also via function. Now, how do you get IRR via function? Equals to IRR. How do I get IRR via function? Equals to IRR, because now you are not calculating NPV. So it was equals to NPV. Now you are calculating IRR. So equals to IRR, bracket open. All cells of net cash flow from year 0 to the last year. So equals to IRR. All cells from year 0 of net cash flow. So B12. Remember, in NPV, I didn't take B12. I started from C12, from year 1. But here, all net cash flows. B12 till, where's the last one? F12. IRR. Okay. Improfessional, writing so long decimal places, improfessional. So make this percentage to 2 decimal places. So put the percentage tab, 2 decimal places, it's 14.22%. Remember, you got it here 14.28, it's 14.22. That's it. Can you imagine how much time you saved? You just applied the IRR function, IRR, bracket open. NCF, year 0 till year 4 cell, that's it. Okay, so to find NPV, your traditional pattern should now be removed. Investment, revenues, all variable costs, taxable profit, tax, scrap value, working capital, capital allowances, net cash flows, discount factors, present values, NPV, then increasing the rate to get negative NPV, then IRR, no need to do. Just stop at net cash flows. NPV via function equals to NPV, cost of capital percentage, comma, NCF till year 1 to year 4, bracket close, plus NCF year 0. You get NPV. IRR via function equals to IRR, bracket open, NCF till year 4, year 0 to year 4. Okay. And if you need to find MIRR, this also takes a hell lot of time. Those who have studied MIRR, they know that. Such a long formula. Leave it. MIRR via function now equals to MIRR equals to MIRR, bracket open, same like IRR. All net cash flows from year 0 to the last year. So B12 to F12. Okay, like IRR. But if I close it here, I get IRR. Here I'm finding MIRR. So don't close the bracket, equals to IRR, B12 to F12, that gives IRR. Equals to MIRR, B12 net cash flow 0 till therefore, comma, 2 times your discount rate. What was your discount rate? 10%. Again, comma, 10%, 2 times your discount rate. Okay. MIRR, Same like IRR, equals to IRR, B12 to F12, closed, you get IRR, equals to MARR, B12 to F12, comma, 2 times your discount rate, 10%, 10%, bracket closed. You get MIRR. Again, if you need percentage till 2 decimal places, put percentage, 2 decimal places, 12.19% is your MIRR. So just doing MIRR, bracket open, all net cash flows, year 0 till year 4 cell, comma, WACC percentage, comma, WACC percentage. Okay, so these are the 3 functions I have told you, which will help you gain extra 6 marks, professional marks. If you don't do like this, you will still know the calculation marks, but you will lose professional marks. So make sure whatever further practice you make now, this is via these functions. Okay, if you want to copy these formulas, you can. I'm giving you 2-3 minutes to copy, and then I will move forward. Abdul Bari, don't worry. When I'm conducting a webinar, I will tell you everything. Don't worry. Just let the lecture proceed. Nothing will be left. Don't worry. Okay, now these particular functions are going to save a hell lot of time. That's clearly evident in my NPV calculation in IRR. But it will also help you in finding KD 1 minus T of redeemable debt and it will also help you in finding market value of bonds. These functions will also help you in finding KD1 minus T of redeemable debt and also market value of bonds. Okay. Now you have seen multiple instances that in WACC topic, weighted average cost of capital, says A Limited has 8% debentures at a par value of $100 and market value of $105. Debts are redeemable after 4 years at par. Tax rate 30%. Find after tax cost of debt, that is KD 1 minus T. Okay, this is a question which you have seen many times in your WACC calculations, that A Limited has 8% debentures at a par value of 100, market value 105. That's are redeemable after 4 years at par. Tax rate is 30%. Find after tax cost of debt KD 1 minus T. Now, I have taught you, if you are my student, that there are 4 types of debt you will get in AFM exam. If the debt is irredeemable debt, remember we used to apply a formula I over P naught. Okay. If debt is spread with spread, you apply a formula for KD, RF plus spread. But if it's redeemable debt or it's a convertible debt, we apply IRR, right? I hope you remember this. Okay. That when I'm asked to find cost of debt, because this is, I'm referring to the topic of weighted average cost of capital WACC, that in WACC topic, you have to find KE, cost of equity, through CAPM, through DVM, through Modigliani and Miller. Cost of bank loan is given, KP is easy, but for cost of debt, KD, I have taught you debt can come for 4 types. Irredeemable, apply a formula I over P naught. If it's redeemable or convertible, IRR. And if it's spread based bonds, so RF plus spread. Now, if debts are redeemable or convertible, you apply IRR. It takes a lot of time. I just taught you IRR function. It will save your time. Now, how did you used to do this question traditionally? A Limited has 8% debentures at a par value of 100, market value 105. Debts are redeemable after 4 years at par, tax rate 30% after tax cost of debt. Now you used to say, okay, so debt is redeemable after 4 years, 0, 1, 2, 3, 4. Since it's a redeemable debt, you have made up your mind that tutor taught you that for redeemable debt, if you need KD, IRR. So for redeemable debt, it's 0, 1, 2, 3, 4. There are 3 transactions. 1, market value. That is an outflow. So market value is 105 outflow. Then after tax, interest. So interest is 8%, right? So after tax is going to be 1 minus 0.3 equals to 5.6%. Interest is 5.6% of par. So you get 5.6. And then there is redemption at par or whatever, it's at par 100. So these are the 3 transactions. Okay, market value outflow, after tax interest, that's an inflow for 4 years, and redemption. Then you get net cash flows. So net cash flows are negative 105. So it's B31 and then C32. D32, E32, and then sum of F32 and F33. Okay, this is what was taught to you, that when a debt is redeemable, for KD, if it's irredeemable, I over P naught. If it's spread-based bond, RF plus spread, but for redeemable or convertible, IRR. So it's 4-year redeemable, 0, 1, 2, 3, 4. For KD1 minus 2, you will apply IRR approach. So market value is outflow, after tax, interest inflow, redemption inflow. Okay, you get net cash flows. Now you multiply it with discount factor. So let's suppose it's 5.6%. You take 6% as the discount factor. So the factor is 1, and then I will copy from the table 6% factors. So for 6%, you can see 0.943, 0.890, 0.840, and 0.792. Okay. Net cash flows into discount factor gave you present values. B34 net cash flow into discount factor, B35. No need to repeat, just drag. And you're going to get NPV as the sum of all. B36 to F36. So for number till 2 decimal places, it's 6.40 negative. Now, once you have got the negative NPV, to make NPV positive, you need to reduce the discount factor. Okay. So let's suppose I make a discount factor 2%. So let's copy the factor 2%, 1, and then again I open the formula sheet for 2%. It's 0.980. 0.961, 0.942, 0.924. Okay. Again, net cash flows into discount factor will give you present values. So net cash flow is 105. That's B34 into new discount factor B40. Drag it on. And you get the other NPV as the sum of all B41 to F41. Once you have the negative positive NPV, you can go and place it in the IRR formula. So IRR formula is small a, rate of positive NPV, that's 2%, plus capital A. What is capital A? Positive NPV. So D43 over D43 minus negative NPV, D38 into small b, rate of negative 6% minus 2%. For percentage of 2 decimal places, click on percentage, 2 decimal places, 4.31% is the IRR. Okay. Now, don't you think that you have studied this, how to find IRR via redeemable debt, 4 years cash flows, market value, after tax, interest, redemption, net cash flows, then first discount factor to get one NPV, then the second discount factor increasing, decreasing to get the other NPV and IRR. No need to do it now because IRR has a function. Now, in future, again, I'm not saying you cannot do like this, but it will take time and you will lose professional marks. If you want to earn professional marks, okay. It's a redeemable debt. You all know it will be IRR. It's a redeemable debt. You all know it will be IRR. Okay. So 4 years 0, 1, 2, 3, 4. It's 4 years 0, 1, 2, 3, 4. So market value outflow 105. After tax interest 5.6, 5.6, 5.6, and redemption 100, you get net cash flows. No need to work beyond this net cash flows. No need to work beyond this net cash flows. You know you have got net cash flows, then first discount factor to get present value NPV, then second discount factor to get present value NPV, then IRR. You have got the net cash flows. No need to go anything beyond. Just find IRR via function, because you know cost of debt of redeemable debt is IRR. So just stop at net cash flow and apply the IRR function. So what did I tell you about IRR function? Equals to IRR, bracket open, all net cash flows from 0 to the last year. So net cash flows from 0 is in B34 till last year, F34. Bracket closed, enter. 2 decimal places, percentage. See, 4.22, 4.31, almost same. So can you see how much time you're saved? That IRR via function is just equal to IRR and NCF from 0 till last year. Whereas if I don't use the function, I lose the professional marks as well as market value outflow, after tax interest inflow, redemption, net cash flow, then first discount factor, seeing from the formula sheet, then multiplying to get present values and NPV, then increasing, decreasing to get second. Very long. If you have the concept that cost of debt of redeemable is via IRR, just apply market value outflow, after tax interest inflow, redemption, net cash flows, and use the IRR function. Okay, now one last thing of these functions that this is going to also help you in the topic of market value of bonds. As you have studied, the market value of bonds is the present value of all future outflows of a bond. So what are the outflows of a bond? Interest plus redemption calculated on a before tax basis, discounted at KD. So market value of bond is the present value. This is also a topic of WACC. The present value of all future outflows of a bond, interest redemption discounted at KD, calculated on a before taxes. Okay. Now you get a question like that. A Limited has 6% bonds at a par value of $100, which will be redeemed after 5 years at 5% above par. Cost of debt is 10%. Tax rate 30%. Find market value of bond. Okay, this has been a question many times coming in WACC, that A Limited has 6% bonds at a par value of 100, which will be redeemed after 5 years at 5% above par, cost of debt 10%, find market value of bond. You apply the definition that market value of bond is the present value of outflows, interest redemption discounted at KD. Now this bond is being redeemed after 5 years. So you make 1, 2, 3, 4, 5. This bond is being redeemed after 5 years. So 0, 1, 2, 3, 4, 5. There are two outflows of a bond. Interest, redemption. So interest of the bond, this is calculated on a before tax basis, right? I've told you in the definition, before tax basis. So interest is 6%. No need to deduct tax, like KD1 minus T and KD1 minus T, we take tax. Market value of bond is before tax basis. So 6% of par value 100. So every year interest is 6. And redemption is on 5% above par, 105. These are the two outflows of a bond. You net them all to get net cash flows. 6666111. Discount factor is KD. What is KD? 10%. No tax impact. Take directly tax 10%. Remember, this is a mistake FM, F9, financial management students as well as AFM, advanced financial management students make. Cost of debt, the KD you computed, that is computed after tax. But market value of bond is before tax. Don't mix it. So discount factor is 10%. You took it from the table, 0.909, 0.826, 0.751, 0.683, 0.621. You get present values. So 6 is B53, B54. Okay. Drag all. And if you sum them all, sum of all present values, B55 to F55, you get market value of bond. Now, basically in market value of bond, what you're doing, you are taking NCF, then discount factor, then present values, and adding them all to get NPV or market value. So this can be done via NPV function. This can be done via NPV function. Because what effectively you are doing? You are taking interest redemption, net cash flows, multiplying by discount factor to get present values, adding them all to get NPV or market value of one. You can do this via NPV function. Write interest, redemption, and get net cash flow. Stop at net cash flow. No need to apply discount factor or anything else. Stop here. Once you get net cash flows, okay, NPV function equals to NPV bracket open, cost of capital. So what was the cost of capital? 10%, comma, NCF year one till last year. So NCF till year one till last year. NCF for year one was in B53 till F53, bracket closed, plus the investment cell. And there is no investment cell here. B10, B12, no investment cell here. So 0. Okay, stop it at 2 decimal places. It's a number, not a percentage. See, 87.94. So NPV IRR functions are not only helping you in NPV calculations, the long NPV answer, the long IRR answer, no. They also help you in these market value of bonds. They also help you in this KD. You all know KD of redeemable, that is via IRR. No need to write market value after tax. This is after tax basis. KD is after tax. Redemption, NCF, discount factor, 1 present value, 2nd present value, 2 NPVs, 2 IRRs. Stop at NCF. And you know, cost of debt is via IRR. Cost of debt is to IRR formula. Directly apply IRR function. Equals to IRR, NCF from year 0 to year last. And similarly, market value of bond is the present value of 2 outflows, interest, redemption, discounted at KD. No need to apply discount factor, stop it at net cash flow and apply the NPV function. Okay. Any questions till now, please tell me. And then I will tell you one last thing regarding this professional skills. Saf, I think you should answer everything on spreadsheet. Cost of debt KD is after tax. For there are 4 types of bond in AFM. KD, if it's irredeemable, I over P naught. If it's a spread-based bond, RF plus spread. But if it's redeemable, you find it via IRR. So no need to do whole IRR workings. Just stop at NCF, market value outflow after tax, interest and redemption, and apply the IRR function. And in market value of bond is the present value of 2 outflows, interest, redemption, discounted at KD. So this can be done via NPV function. But market value of bond is before tax basis and cost of debt is after tax. Okay, now one last thing which I'm going to tell you all. Okay, now one last thing which I'm going to tell you here is that yes, I'm really point. Now, one last thing which I'm going to tell you again, you have to earn professional marks. That's the main objective. So you have to act professionally. Okay. And to act professionally, you have to work professionally, like don't enter into long digits, work to 2 decimal places. I've told you how to stop 2% decimal places via the practice platform, how to stop to 2 decimal numbers. Then no need to work very long calculation of NPV, IRR and MIRR, use the functions. Now, one last thing is related to BSOP. This will also help you to gain professional marks and save your time, because it's not about gaining professional marks only, it's saving time as well. Now in BSOP, people who have studied from me, this is a past paper question called Allegro Technologies. Okay. And in BSOP, what do we do? Traditionally, BSOP is solved via a 5-step approach. Traditionally, BSOP is solved via a 5-step approach. Okay. Now, what is the 5-step approach of BSOP? That we first write down PA, PER, SNT, right? This was the first step of BSOP. That traditionally BSOP was answered via 5-step approach. That in the first step, we used to write what is PA, what is PE, what is R, what is S, what is T, right? So PA, PER, ST was written. Then in step 2, we do a working called E minus RT. So in step 2, we used to do E power minus RT. Okay. Then step 3, we used to find D1 and D2. Then in step 4, we have to find ND1 and ND2 by looking at normal distribution table. And in step 5, we used to apply formula, long formula of call and put option to get call and put value. Okay. These are the 5 steps of BSOP, which every student has studied through me, through others. And this is how we used to solve a BSOP question. That in step 1, it's a writing thing, write PA, PE, RST. Then in step 2, E minus RT. Then step 3, D1, D2. Then step 4, find ND1, ND2 by looking at normal distribution table. Remember 0.5 minus from the value 0.5 at, and then apply the formula of call and put to get C and P value. Okay. And they were scary formulas, right? They were scary formulas. See, these are the formulas of BSOP. PA and D1, P and D2, E minus RT. D1 is ln P over P plus R plus 0.5 S square T over S root T. D2 is D1 minus S root T. Put S P equals to C minus PA plus PE, E minus RT. Very, very scary formulas. Good news for all of you. When you will open your examination, okay, on the left hand side, go on the left hand side, you will find a word processor where you will write answers if you want to answer on Word. You will find a spreadsheet where you will write answers on spreadsheet if you want. And there is a new thing added called BSOP calculator. There is a new thing added called BSOP calculator, and all calculations of BSOP are done via this calculator. No need to perform any calculations. Okay. Now, let me just compare it and then end this session. Okay, please pay attention. This is my Allegro Technologies questions where I have to perform a BSOP working. This is my Allegro Technologies question where I have to perform a BSOP working. Okay. Now I did 5 steps traditionally. You people have taken classes from me. You know this question was solved in the class. Now step 1, PA 107863. Step 1, PE 113,000. R 3%, S 30%, T 2 years. Step 2, E minus RT, found E minus RT 0.942. Step 3, D1, D2. For D1, it's ln 107863 over 113,000 plus 0.03 plus 0.3 squared to 0.52 over 0.32. Then D1 is got. Then you got D2. Negative 0.18. Then step 4, D1.24 was split into 0.2 and 0.04 and then looked at the normal distribution table to get ND1. And then for D2, it was split into 0.1, 0.08, looked at the distribution table to get ND2. And once you get ND1, ND2, step 5, you get a call option value via the long formula 18534. You get put option value via the long formula 17117. So much hectic task. 5 steps. So much hectic task, 5 steps. That first find PA, PE, RST, then E minus RT, then D1, D2, then normal distribution, and D1, D2, and then call and put value. Now in the exams, at the left-hand side, you have a BSOP calculator. Click on that. And what do you have to do in a BSOP calculator? You just have to put the values of PA, PE, RST. It will open like this, right? You will click on that BSOP calculator. This will open like this. And you just have to put PAPERTS. The answer will come, everything immediately. Everything will come immediately. D1, D2, ND1, ND2, CP, call put value. No need to do anything. You just have to do one thing. Put PAPERST. Let's check it. The question I did with you in the classes. What was PA there? 107863. What was PA here? 107863. So in PA, I will write 107863. Okay. Okay, so PA is 107,863. In my question, what was PE? See, PE was 113,000. PA was 107,863. Here, seeing, and PE was 113,000. So in PE, I will write 113,000. Okay. RTS. So what was R? 3%. T was 2 years. S was 30%. So R was 3%. In R, I will write 3%, 0.03. T was 2 years. Okay. And S was 30%, 0.3. Right? R was 3%. So I wrote 3%. S was 30%. So 0.3 and T is 2. Okay. Enter. Now you see, after writing PAPERST, I had to do a step 2 manually in the paper, then D1, D2, then ND1, ND2 by looking at distribution table and then call and put value. The BSOP calculator, I just put all 3 things and pressed enter. I just put all 3 things, PA, PE, R, T was 2 and S was 30%. Enter. Can you imagine? Everything is ready. Everything is ready. D1 is 0.24. So here, check my D1, manual working. It's 0.24. Can you see here, 0.24? And D2 is 0.18. So 0.24, 0.18. See, D1, D2, 0.24, 0.18. Seeing? Automatic. ND1, ND2. I did such a long format for ND1, ND2. So I got ND1 and ND2 as 0.59, 0.42. See, 0.59, 0.42. Okay. And then call and put 187, 172. Call and put I did manually. See. 18,700, 18,534, 17,100, 18,500, 17,100. See. 18,500, 17,100. So I just have to put now PAPERST. Once I put these 5 figures, everything will come directly. No need to do anything else. You just have to enter all of this. And once you enter all these 5, everything is ready. Okay. Do use this if you want to gain professional marks, see how much time is being saved, and I'm earning professional marks. Okay. Hope this thing has helped you a lot. Okay. I'm signing off now. If you have any questions, please share on the WhatsApp group with me. Thank you.